number 5, Dr. Russel Norman.
Thank you, Mr. Speaker.
Order. Order. I want to hear Dr. Russel Norman.
Thank you, Mr. Speaker. My question is to the Minister of Finance and asks, does he agree with the findings of the Savings Working Group, which found that the favourable tax treatment of property investment accounted for about 50% of house price increases from 2001 to 2007?
The Honourable Bill English.
Well, Mr. Speaker, yes, to some extent we did agree with them. It's likely it was a contributing factor, and that is why we moved to increase the effective tax rate on property investors by reducing depreciation deductions, adjusting the LAQC rules, tightening working for families definitions to exclude losses on property investment, reducing the top tax rate, which significantly reduces the value of losses that they can claim and therefore tax they can get back, and giving increased funding to IRD to target property speculators who are avoiding property tax.
Dr. Russel Norman.
Thank you, Mr. Speaker. Does he...
Order. Order. Please, both front benches. I'd ask them to show some courtesy. Now...
Yeah, another sup, I think, Mr. Speaker.
Order. 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 The House will settle. Order. We won't have any more interjections, even though they might be helpful like that. But I ask both front benches, please, that's unacceptable to continue interjecting, and both members are doing it in a blatant fashion. Dr. Russel Norman.
Thank you, Mr. Speaker. Does the Minister disagree then with the recommendations from the Savings Working Group, Treasury, the OECD, that have all found in favour of a capital gains tax, and the IMF, in order to put downward pressure on house prices?
The Honourable Bill English.
Well, Mr. Speaker, yes, we did disagree with the recommendations. If we'd agreed with them, we would have implemented a comprehensive capital gains tax. But I'd have to say the house prices are flat or falling generally, and that is going to assist with the rebalancing of this economy towards a focus on exports, investment and savings, and away from excessive property speculation.
Dr. Russel Norman.
Thank you, Mr. Speaker. Why does the Minister continue to insist that a capital gains tax would be too complicated when they can manage it in the United States, China, Denmark, Finland, France, Germany, Poland, Singapore, Sweden, Switzerland, the UK, Japan, and even the Australians can do it? So what is he implying about New Zealand, that it's too complicated for New Zealand?
The Honourable Bill English.
What's that?
Order. The Honourable Bill English.
Don't tempt me.
Order.
Mr. Speaker, the Tax Working Group looked at capital gains taxes as they operate in all those jurisdictions, and on balance actually decided not to recommend in favour of a capital gains tax. The other significant reason is that actually it doesn't raise much revenue in the shorter term. As I said, it could take, even the proposal we've heard could take up to 15 years to raise $700 million worth of revenue, and when the market is flat or falling, it could possibly raise no revenue at all.
Dr. Russel Norman.
Thank you, Mr. Speaker. Well, with reference to the flat housing market, does he agree with Fran O'Sullivan, who recently said that now is the best time to introduce a capital gains tax when house values are relatively static, and that it's, quote, quite simply a nonsense to continue to run a system which protects the asset rich?
The Honourable Bill English.
Well, Mr. Speaker, I think the reason she's advocating that is because, for the foreseeable future, the readers of the New Zealand Herald wouldn't be paying any capital gains tax because there is no capital gain. And that is a problem for a party who are proposing it as a way of paying for other very expensive promises. This tax would raise almost no revenue. They'd have to find some other way to pay for several billion dollars worth of promises.
Question number 6, Dr. Russel Norman.
Thank you.